Hello, Jason Piskey with Reef Point Realty, and today I am talking about the pre-approval process and things to avoid when you're applying for a loan. I made a list, so I'm going to be looking off screen a little bit as I talk, so I just want to prepare you for that as we start. So there's a lot of things that you can do to make sure that you don't end up losing out or messing up your pre-approval. And so one of the first things to avoid is obviously, this may sound obvious, but avoid quitting your job or switching to a new job um, or becoming self-employed. So one of the things that the lenders are looking for is stability, and they want to see that you are in the same position for a specific length of time. And you may have just gotten a fantastic opportunity for a big promotion and more money, but that change is going to cause lenders to be concerned about your ability to stay in that position, and it's going to cause them to want to pump the brakes a little bit on your loan approval. So try to avoid switching jobs if you can. Another one, and I've actually seen this happen and I've seen it cause people to lose out, is don't buy a car, don't buy a truck, don't buy a boat. Don't buy any large ticket items like that, because as soon as it hits your credit, it changes your credit score and it changes your debt to income ratio, because now you have a new debt that wasn't included in the original factors. So I've seen people where they've still had the approval, but their approval has lowered so much that they are no longer able to qualify for a home that they were really interested in. Don't pay off or don't use your credit cards excessively, and don't open any new credit cards. Again, this may sound like basic information, but I've seen it happen. So what going along with that is don't go out and buy furniture, especially if you've already gone under contract with a home that you really love and you're excited and you're ready and you want to buy all this great furniture and make it into this showplace, and you go out and you spend $5, $6, $10, $15,000 on new furniture. And what happens is, again, just like if you bought a car, it throws everything off and it could cause you to no longer qualify. So again, don't do that. Just wait until you've closed and everything is good, and then you can go out and buy the furniture that you want. Don't spend the money that you have set it aside for closing costs. So if you've got money set aside for closing costs or down payment, don't use that money to go out and spend on furniture or a vacation or whatever. That money is set aside and it needs to be there for the closing. So make sure that you've done that. Don't hide or withhold any debts or liabilities that you may have. So I say that because they're going to pull your credit. They're going to see it. And if you've got something out there, just put that up front and say, oh yes, I've got this loan, or I've got this item out here. They need to know that so they can make a proper decision. Don't co-sign for anybody. So even though you're not the primary, if you're co-signing for somebody, that will hit your credit, that will count against you. And again, it could throw off your numbers and prevent you from getting a higher approval or being able to even qualify in the first place. Don't change your bank account. So you may have issues with your local bank and you're frustrated and you're upset, but if you're right in the middle of trying to buy a house, don't change to a different bank account. Again, it throws up a red flag to the underwriters and it makes them more cautious, and it could cause you to no longer qualify. And lastly, don't make any large deposits or large withdrawals from your account. And I say this because if you're getting help from somebody, somebody's going to help you with a down payment, that's fine. And as long as you've got it documented. But when that money comes in, everybody needs to know what that is and where it's coming from and why. because all of those types of things throw, like I said, a red flag to the underwriters, and it could cause problems. I had one client in particular that went on vacation right as an offer got accepted, and they weren't near their local credit union. And one thing that they did to be able to get in that earnest money deposit up front is they couldn't go to a credit union where they were to wire the money. So they transferred the money in two lump sums to a relative who then went to a credit union and wired the money on their behalf. And it threw all sorts of uh, warnings out to the lender and escrow and everybody. And it took us a couple extra days to work through all that with explanations of why we did this and everything else. So just be cautious with that. If you're planning a vacation, don't change your plans, but just know that if you are going on vacation and you need to be making an earnest money deposit, make sure everybody's aware of that so we can make other arrangements and try to avoid large deposits or large withdrawals and third parties making payments on your behalf. Again, as long as it's all documented, it's okay, but it can delay the process. Those are just some of the basic don'ts when you're applying for a loan. So if you have any questions, definitely feel free to reach out to me. My name is Jason Piskey. I'm with Reef Point Realty, and I thank you for your time.